Last week, Bitcoin had its best week since March, and at one point hit its highest level since June of last year. Joining us now is Tom Lee, Fundstrat Global Advisors, co-founder and a CNBC contributor. And we can talk Bitcoin, but that's not why you're here. In fact, I remember the time when I used to needle you at one point. I wasn't really needling you, but Bitcoin had dropped to about 4,000 from 20,000. And you were here, this well-respected equity analyst, and you said, yeah, I'm sticking with my 20,000 target on Bitcoin. And all of us would ask you, why are you getting involved in something so speculative that can hurt your reputation? Of course, it not only went from 4,000 back to 20, but it went to above 60,000.
Yeah.
So, I mean, kudos to you for just doing the work needed to understand that there might really be something to this, which a lot of people have not done to this day. Famous people haven't done. But I want to talk to you about stocks. You have not been that negative this year on equities either.
That's right. I think at the start of this year, a lot of folks thought we were going to have a hard landing and the Fed was going to really be tough on inflation. And we're now at the midpoint. Stocks are up 13%. You know, the Fed's allowed markets to rise, financial conditions to ease. And it looks like we're slipping into an expansion. I think a lot of skeptical folks might be surprised, but, when you get to the mid-year and you're up over 10%, 9 out of 10 times you're going to finish the year even stronger. Maybe add another 12% in the second half.
Yeah, I mean, so the history...
That would be 25%.
The history of, look, markets trend. And I also keep pointing out that the S&P is 10% lower than it was a year and a half ago, when I think nominal GDP is up 15% since then and earnings are higher. So it's not as, even though we get stuck in this mode of, wow, we're up a lot, we've traded higher under different circumstances.
Well, why did you say that the Fed has let... okay, so it hasn't tried to stop the stock market, but it hasn't been expansionary, has it?
No, the Fed's running tight monetary policy, but last year at each of these FOMC press conferences, every time Powell was asked about how markets might be rallying, he got very uncomfortable. But as you know, in the last few meetings, when markets rallied on the FOMC rate decision, he didn't push back. And I think it's because inflation is going to set to track lower in the second half. I mean, half of inflation is housing, cars, and energy. It's 55% of the CPI basket. And we know housing's going to flatten out. Used cars are already rolling over, and energy's down. I mean, it would take a lot for everything else to keep inflation above 2.
Well, the narrative is that the pent-up demand for services and experiences with the millennials, that it's, there's not enough plane seats to go around, there's not enough tables at restaurants to go around, there's not enough workers to staff all these things, so they're going to keep asking for more wages. So that's the whole narrative, is that that's going to keep inflation high.
Yeah, I mean, it's been tough to see through, but those are beginning to cool on the wage side, and it's not as big a part of the overall CPI basket as people realize. It's roughly 25%. So, I mean, at this point, the Fed is trying to contain what could be more inflation from that little part of the basket. And if you look at the stock market, it's already kind of telling us inflation's set to cool pretty sharply.
So it's the bond market, isn't it?
And the bond market, yeah. In fact, I think people, when they look at valuation, because I heard some of your guests talk about it, excluding FANG, the market's at 15 times forward, which is really reasonable.